All right, now I want to bring in a gentleman by the name of Jim McCaughan. He is CEO of Principal Financial Group. Jim, it's good to have you.
Global investors.
Global investors,
yeah,
indeed.
Part of Principal Financial.
And by the way, you're going to ring the bell today because
yes.
you were the first company to IPO after 9/11. Welcome back.
Correct. 10th anniversary of our IPO, and it's been 10 growth years as a public company.
Congratulations. Now, one of the exciting things about your business, you manage 401ks for about 3.5 million people. So you actually get to see where people are electing to put their money. What are you seeing?
Yeah, what we're seeing is a move towards target date funds, which allow people to have a professionally constructed asset allocation, a disciplined plan, which makes them able to invest on the dips and over time do better than the market as a whole.
And when you talk about a target, in other words, someone says, I'm going to retire in 40 years, and explain how the thing shifts.
If you say you're going to retire in 40 years, you buy a fund with a target date of 2050. When you've got a long way to retirement, it's an aggressive fund with a lot of equities for growth. Over time, it moves towards fixed income, moves towards stability and yield, which is what you need when you retire. So over time, it's a disciplined plan that suits your risk and your investment requirements.
All right, so that's one thing you're seeing, people taking a long view. What else are you seeing?
We're also seeing, particularly with our retail customers, a great hunger for yield. A 2% 10-year Treasury yield doesn't do anybody any good.
No, it doesn't.
So we see a lot of appetite for well-managed, high-yield funds, preferred securities where we're a leader, diversified income funds using, for example, real estate. So anything that can get a yield in a secure and diversified way is very popular with our retail customers.
And what kind of yields are these people getting?
They can, instead of a 2% yield on the 10-year, they can get 5, 6, 7 on a diversified yield strategy.
That's the yield, and now how's the return this year?
The return this year has generally been quite good. Although the market has been very volatile, you've had 3, 4, 5% moves in a day, you've seen actually many of these investments gain value slightly, rather as the equity market has. It's actually in aggregate not been a bad year for investors, for US-based investors so far.
Total return, dividend, plus the actual capital gain of the thing, what are we talking about?
Well, hard to generalize, but modest positive. You're talking about, up to 10%. It's not been a great year, but it's not been a bad one, in spite of the panic you see around.
There'll be a lot of people happy with 10% year to date. The S&P isn't even there. Talk to me about your views of the market, because you deploy $240 billion of capital.
Yep.
What do you think of the process in Europe right now?
I think the process in Europe is very flawed. It's as much a political crisis as a financial crisis. Right now, Europe has the wealth that it could use to satisfy the debt crisis and pay down debts, but it doesn't have the political will. The Germans are not going to subsidize those that they see as the more profligate countries in southern Europe. So I think this will take some years to really sort out. I think that unfortunately the marathon that starts over the weekend of the European finance ministers has more chance of disappointing short term than of encouraging.
Now you're someone who takes obviously a very long-term view based on our conversation, but sounds to me like you would be circumspect of a Dow that's up 225 points.
Short term, yes, but what I would be doing is acquiring on setbacks. You've talked about the short-term hope that's built around the European process or what the Fed might do. More important, I think, is that American business continues to do pretty well. Hidden by the macro crisis, we're in the middle right now of a pretty good earnings season. I think that shows the fundamental strengths of American business, and therefore buying on the downdrafts whenever the macro side leads to problems, leads to fears, disciplined rebalancing, keep buying equities on setbacks. I think that's the way that the long-term investor should be behaving.
All right, so quality U.S. stocks, corporate bonds, some of which are high yield. These are things you like. I got to ask you before we let you go, what about gold?
Gold I find very hard to give a fundamental assessment to. I do think that many people have thought of gold as a safety first in the storm. The problem I would suggest is 2 or 3 years out for gold. What happens to a non-interest-bearing investment when you can see yields in other places? I wouldn't be a buyer of gold right now for that reason.
All right, Jim McCaughan, president of Global. Did I get it right? Global
Principal Global Investors.
Principal Global Investors. Excellent.